Let's start off with emerging markets as a whole. I mean, we're seeing some great gains coming through, and some say that they're not offering as great value as what we've been seeing in the developed world. Clearly, you think that we're going to see some more gains coming through for emerging markets. It's obviously a very difficult decision for investors right now because they are looking for value.
Well, we have to remember at the start of this year, emerging markets had outperformed. There have been some strong fund flows, and everyone was saying it's time to reduce your exposure to emerging markets because they were in a bit of a bubble and they'd come back. And what we've seen again this year is exactly what we expected in Investec, which was to see further outperformance. Not huge outperformance, but steady outperformance. And at the end of this year, we find that equities in emerging markets are still on a discount to developed markets. The growth is still better, and the valuations are still good, and the company's still well run. So we expect further outperformance next year and in the long term.
Max, do you distinguish between emerging markets when you're talking about this growth? Are we looking at really the BRIC countries? Are you looking at some of the smaller frontier markets as well?
Well, it's interesting that this year what's outperformed have not been the BRIC countries. India's done well, but Brazil, Russia and China have generally done poorly. Small countries have done well, and small and mid-sized companies have done well. So the big countries, the big stocks, particularly those you can buy on Wall Street or in London, have underperformed. That may well continue. I think now you have to be much smarter to be an emerging market outperformer than you had to be last year. You have to go to the smaller countries, the smaller companies, and I'm sure that will continue. That also means, incidentally, that I think you'd have to go to the frontier markets, for example, Southeast Asia like Vietnam, Central Asia, and particularly Africa. I think you can't just stick in with the big countries anymore.
Well, just some of the countries that have done really well, and just looking at your research: Chile, Colombia, Sri Lanka, Ukraine, Mongolia. What about some of the African markets? Which markets are you most bullish about when it comes to Africa at this point in time? We know the likes of Kenya have really outperformed, and South Africa not doing as well as some of their peers.
Well, we have to remember that most African markets are merely a collection of a few stocks. And Africa is a bit of a mixed story. That there are clearly mounting problems in South Africa to do with the lack of resources in the mining sector. Competitiveness is going down, labour costs, energy, all sorts of problems in South Africa. And that must overhang that market. But the outlook for a lot of the other economies is exceptionally good. East Africa is improving. Mozambique has turned around as one of the sort of stars of Africa. Nigeria is rapidly improving. So there are lots of opportunities, but we mustn't start to think that Africa is just one market, one economy. It isn't. It's a broad variety of different economies, different politics, different markets, and some will do well and some will do badly. Some are going up, most are going up, but some will probably be going down.
Max, how about some of the risks with those markets? Because, of course, research isn't always readily available. You also have corporate governance issues in some countries as well. Are the rewards commensurate with the risks you're going to be taking?
That's certainly true in Africa. There are corporate governance issues and more importantly, national government issues. In the proper emerging markets, there is a sufficient process underway to make it relatively unlikely that these countries will slip backwards into the bad old ways. But that is still a severe risk in Africa, obviously. For example, a couple of years ago, we were getting pretty bullish about Zimbabwe. We thought that things were certainly improving and could be improving dramatically, and there was great value. What we've seen there is that progress has gone backwards. There's been a sort of process of indigenization, which basically has repelled overseas investment, and it's sort of slipped back into being an uninteresting market as far as we're concerned. Well, Max, so yes, there are clearly risks. We have to be aware of those.
Well, Max, let's weigh up the risks between the likes of the developed world and developing markets. Clearly, perceptions of risk have changed significantly, and once we saw the crisis hit, we saw a lot of money being repatriated back to the developed markets, and there's also a bit of a fear now that if you don't head into the developed world, you won't catch them on their upswing, because if you look at it, I mean, and taking the JSE All Share as an example, we've rallied significantly over the last 10 years, where the Dow Jones hasn't done very much. So it is about looking for value right now. What sense are you getting in terms of the perceptions of risk out there with regards to developed versus emerging markets?
Don't get me wrong, individually in countries in the emerging markets and particularly in frontier markets there is risk, but collectively we think the risk has been significantly overstated, and that means that the discount valuation you get in emerging markets is unjustified. So that's why we continue to be bullish on emerging markets for the short, medium and long term. And there are serious issues in developed markets, no doubt. It's worth keeping an eye on what Goldman Sachs are saying. They're saying that they expect that the MSCI Global Index, which currently has a weighting of 13% in emerging markets, will see that increase over the next 20 years to 31%. In 20 years' time, they expect, in terms of market capitalization, the emerging market capitalization to exceed that of developed markets. So there will be swings to and fro. There will be countries doing well and doing badly, but collectively, I don't think we have much doubt that the emerging markets, barring a complete global shock, are going to be a strong place to invest for 1 year, for 5 years, and for 20 years.
Max, which are your most, the emerging markets that you're really focusing on right now? If you look at China, I mean, Shanghai Composite hasn't done nearly as well as some of its peers as well. Would you be putting your money there? Where would you be putting your money right now heading into 2011?
Well, it's always a very difficult question. I think at the start of this year, we would have focused on the Andean economies of Chile, Colombia, and Peru, and that's worked very well. So I'm pretty hesitant to try and stick my neck out too far on this. I think China is picking up quite strongly, and although it's a sort of China's a bit of a consensus trade economically, there's great value in the companies, and I think that's got quite a bit further to go in the short term. But again, it's not down to countries, it's mostly down to companies. You can find a good company almost anywhere in the world, you should invest in it. I would say that my main focus in terms of which will perform well, I would say is frontier markets. I think frontier markets have been left behind, not just Middle East, but as I say, Africa, Vietnam, and I think that's where there'll be a big catch-up in the coming year.